It's the market sniper time. So, weakening dollar needs weak oil. But hold on a minute. If the dollar's going down, why would you want oil to go down? Why would it be necessary? Why would it even happen? Because the buying power of that dollar is getting weaker. Why are you going to have the oil go down? If the dollar weakens, Bitcoin goes up, gold goes up, and oil should go up. What is he talking about? Why is this happening? We're going to talk about this and a whole bunch more with you on this live stream. Don't forget, we'll be watching you on this screen as well with your comments. I'm keeping an eye, looking at you, waving at you. Tell us where you're from. What have you noticed reset-wise that have gone on? How's that inflation feeling where you are? Tell us your take. Be our man on the ground, our lady on the ground in your local area, and feed back into the network to the key octopus. That's right. Anyway, so I'm going to show you something that was a visual reminder that we did on our Substack a while ago, and I just want to bring it back into the fore. It's absolutely critical for understanding where we are right now. So just before we bring that screen on, I'm also going to try locate a tweet that we had that was showing something very, very interesting. It was all about the Saudis and oil. It was all about the Saudis suddenly determining that they wanted to no longer hold out for their $100 price on oil, but they actually were ready to increase output. Why would they suddenly decide to increase output? This is the tweet I'm looking for over here, and this is the setup that I want to talk to you about. Because this is really interesting, it's really important, and it's about understanding the macro flows of money. So we are macro technical, we look at big ass charts, and there's a samey feel, and it's very rare that things are identical, but there is a samey feel to the pre-pandemic events with us wanting to be long gold and short oil. Many people don't realize that the case study trade that we gave you in 2019, I should show that as well, was actually a long short trade. It was long gold, short oil to single digits. That's right. So it was a delta neutral trade. In other words, if you get it wrong and you get a major weakening in the dollar and both go up, you're still going to make more money on the gold going up more than the oil. You can go and check that one out. We did a full breakdown of everything that happened. Why am I doing this and just pointing you to our website? No, this is not just being me marketing or something like this. It's understand all the aspects that were part and parcel of that particular element. Why? Because I'm saying to you again, whilst I don't think anything is ever going to be identical, that there's a samey kind of feel. There's many different ways you can create the set of circumstances, but there's a samey kind of feel about what we're seeing right now. And if you understand all that we spotted when this case study rolled, plus all the videos that were done, all the aspects, the charts, there'll be an answer potentially for you. You'll start to notice parallels. So studying your recent history and even your faraway history is incredibly useful for understanding the future. And as someone who was in the weeds, detail deep, who was saying really stupid things like oil that was trading at around $67 is going to go to a single digit for the first time in 3.5 decades. That's kind of very silly, and you can see the buildup of that and how 2014 was very similar. So we had 14, kind of 5 years into 19, maybe even 6, and now we're going 19 to 24. So you got that same 5-year kind of vibe that's just stretching around the election cycle a little bit. And why should oil go down if the dollar's going to be further weak? So where do we start? Well, there's so many different places to start. We've told you on this channel about the fact that we expect the pound to go to 140 versus the dollar. Yes, and we told you that some time ago. And how's it been doing? Well, since we told you, this is what it's done. So let's do the draw for you. And this is all, let's make the case and be clear that we think the dollar's going down. It's not going to be a great time for milkshakers type guys. It's going to look pretty one-sided in terms of the progress of the dollar. In short, we expect it's going to go down. We're going to explain a little more as to why that is in a second. But we've got a setup on the pound against the dollar. We've got a setup on the euro against the dollar. And as a result, once they've triggered, we expect them to have a higher likelihood of potentially performing, and as a result, we are bearishly set up. So TradingView just wants to play silly buggers with me, so let's just reset that and get our draw in. In we grab it, and this is what we told you some time ago. You are going to find yourself looking at the pound creeping in value against the dollar. So let's have a look at that. Don't forget, the pound itself had big dramas not so long ago with its pension crisis. Why are such things potentially not possible or feasible for the Americans? Well, we'll be making the case that the debt-based collapse is going to bring untold peak America has passed, untold harm to America, and you're going to have asset disinflation on homes, on average stock PEs, on the buying power of the dollar, and all of that's going to lead to importing inflation. Remember, America doesn't make near as much stuff as it once did. So here's that draw. We are at our second interim on the pound. You can see a little bit of pushback, quite a big red candle. You had your break over here. You made the first interim and you had a pullback in before you reasserted. But since this call, which is essentially a 140 call, we think the big round number gets run, you're going to be facing quite a lot of deval in the dollar against a flawed British currency. So that's how you're going so long, and there's more to come for those of you. You're at 133 at the moment. To get to 140 is still a substantial 700 points away, pips as they like to say. What about the euro? What about the euro? So first, what am I doing stage one? I'm establishing with you our case for further weakness in the dollar. I'm establishing with you the case for further weakness in the dollar. In short, we are saying, in our view, at least you're going to go and see sub 100 and quite probably on the Dixie in and around, I would say, mid-90s at minimum, and you could go on from there. So we did an interview coming out this weekend, by the way, with Peter Schiff. You can join us and see what we discussed about the Dixie and what he thinks is going to be happening. Watch that this weekend on Saturday. Watch out for a link. We'll push it through Twitter, LinkedIn, and our Facebook group. If you are subscribed to any of those or notified, you'll get the link there. So what's happening with the euro? Well, is it any different? Round about the same time, we said that's a trigger for us on the euro. As soon as it did, it pulled back. So everyone comes and tells you how stupid you are. And then on up. First through the first interim and then a bit of a pullback period. And now we are working our way higher. The euro is lagging the pound, pointing to the possibility that there will be a later overperformance of the euro and less so than the pound, but quite clear the pound can indeed do that 140 and have a bit of overperformance in it. That was far down when we called that. This was in the 107s, 108s. It broke at the 109s. You're now at the 111s and is asking for 116 and a half. You can't see it. I'll pull it into frame, but there it is now. 116 and a half on the euro, the flawed euro. In other words, what is happening is we're going to, the dollar's currently in a state of, I would say, overvaluation for where it is economically. In other words, it got too much strength credit when it was pushing up interest rates. Now it's just done a double cut. And whilst the Fed is pretending that's fine, everything's good, we're relaxed, they're always behind the curve. They're always behind the curve. And people that ask questions about landings, there's no landings, there's crashes. Okay, soft landing, hard landing, this landing. I tell you what, this is a chart which Henrik Zeeberg did, so credit to him. And I just want to cover the topic of landings. You're going to come down hard. And it's not a landing, it's called injury, crash, bang, boom. The kind you wouldn't want in a 747, hitting the tarmac, nose cone first, not on the wheels. So he did a very interesting chart, actually. So shout out to him on soft landings. Now there's, by his reckoning, one soft landing that's occurred in the modern era. literally from the 80s through to 24. But they always talk it's going to be a soft landing, a soft landing. And here's the criteria that's really important that he did that I like. He combined yield curve inversions. There was no yield curve inversion with that event. It is a non-qualifier. If you include yield curve inversions, you have 100% hit rate of a proper hard crash. And if you include unemployment numbers climbing, you see it over there, we're highlighting it there for you. Let's grab the highlighter, maybe go even fatter, and in the blue, you can see that unemployment turning up, unemployment turning up, unemployment turning up, super spike in there, it went higher. Unemployment in there, super spike in there. That was the highest of the lot. That was, hey, we'll shut all SMEs down and advertise how clean Amazon is on the news for still taking orders and delivering, virus-free packaging. That new world, one world order shop for you to buy all your stuff from and stop supporting your little local guy. That one. So unemployment higher. It is moving higher. It is going higher. They lied to you on the non-farm payrolls. We've been all over that. And we were the first. And we'll keep telling you that. I don't mean to sound like a braggart. We told you it's a lie. When we hit a recession, you hit a recession. They said, no, but labor good. Just about 11 of the non-farm payrolls in the last 13 months all retrospectively got revised down. And despite those downside revisions, they did another annual revision on top of that, killing 818,000 jobs that they created on an assumption that never was. Okay? So the Fed is always late. So what do you have? You actually have a downturn in rates. They're always late to start cutting, by the way. You have an upturn in unemployment, and you have the single largest yield curve inversion that you've had in the modern era, taking it from 1982 to current. By the way, 82, the beginning of the bond market bull that was storming, 1980 you could say, that ran the financialization of everything after peak gold. So gold, the big Vietnam, 64, 68, Vietnam War, bombing. Guess what? We're cheating like hell, tricky Dickie Nixon, you name it. Good old Kissinger's got a place for you to drop even more bombs and waste even more money than you did in World War II. And because it's not Europe, the people won't complain. It's some other tribe. They have a different color skin that doesn't speak English on another part of the planet that nobody ever visits. Don't worry. We can absolutely reap mayhem, Agent Orange, you name it. We can behave like savages, flamethrowers, Geneva Convention, all of that good stuff. Good old Henry Kissinger. And what did you get? You got this major deval in the dollar start to build. Then you got Nixon that severed it in 71 as a result of that same super expensive war that was supposed to be still pegged to the gold. That is the reason. And this comes out in anyone who understands history. People accepted the dollar because they accepted it was tied to gold. They didn't accept the dollar. They accept the dollar as a proxy because it was attached to gold that people believed in was there in Fort Knox and allowed an exchange window for you to, here, have your $10 million, give me the equivalent in gold, I'll have it shipped home. That's why they accepted the dollar. And slowly, they severed all the ties till we went Bretton Woods, free float, for which it is just paper. And they've been cheating like absolute mayhem ever since, my friends. That is why, and that is why you're seeing gold going up right now. That is the key aspect. So this is not a landing, it's a crash that's going to come. And I have the same discussion with the guys in crypto. They are saying, but the liquidity is going to climb. The liquidity is going to climb. So let's have a look at that. We'll leave the euro for a segment and see what we can find. Here we go. So this is the real vision, guys, with an interesting chart. It's a discussion. I have a different opinion. It doesn't mean them bad, and it doesn't mean me bad. We're having a discussion about a difference in how to interpret this. And they are saying, this is going up. This is your liquidity. Liquidity is the key driver for Bitcoin. I think you'll find yourself, if you're following our friend help me with it, Lynn Alden, she'll say probably the greatest correlation to Bitcoin's upside is liquidity. It doesn't mean it's universal global liquidity. So that move there, they will say, has brought about that. But in actual fact, Bitcoin has been pretty darn heavy. And I want to highlight that in actual fact, over here, where they are highlighting the break, was actually over there. But you still got a major flush out from 14 that you once were all the way down to 4 before they got the real QE, the 7 trillion, never mind the bank bailouts that also went to all the major banks that you don't know about, for which were scrubbed from zero hedge, the better part of 23 trillion that went to US, European banks and everybody else. That's what it took to get hot money to pump you to 64. You had a rebound down and a final 69. That's what it took. But you had a fall from 10K to 4K in there. And that is very small on that liquidity curve, but it meant the world to everybody. And this is not the environment, I am saying to you, and we're covering a lot here, and we're going to come back to oil in a minute and the inflation and the relates, but this is not the environment where everybody gets to say, pump it all, go like mad. We are saying that in actual fact, we see it differently. We are saying to you that there is an emphasis on inflation right now, and as a result, people are finding it hard to justify crazy cuts and major liquidity. And watch out for these scammers with other profiles, by the way, as I see it. And the problem you have, we are still in an inflation awareness stage. You don't get to mega surge the liquidity like you did here in the political environment of inflation. We've got to curtail inflation. Everybody got hammered from inflation. Woohoo, do it again. Another 7 trillion, 10 trillion. By the way, let's also point out Bitcoin, that was 10K fell to 4, was a different degree of market cap to pump it to 69. How much hot money will you need to take something that's already 63,000 or 63 and a half and pump it to 150 once it's now 3, 4, 5, 6 times larger by market cap? What do you think? So this is the problem. There is no mandate, there's an M missing there, to suddenly pivot from fighting inflation. You need a crisis. You need people's pain. You need something like what happened last time. You need something like what happened last time. And the markets often know and start moving sooner. Think about oil while I'm saying this. You need something like last time. It won't necessarily be exactly the same thing, although it could be just with an M on the you know what, could be something else, we don't know. But it could be lockdown on account of climate, on account of any of a number of reasons or agendas, bank failures, all sorts of other things that could bring a major disinflationary feel. But they need more liquidity to take it up to the next level. And that's what they're missing. That small little down over there, once again, let's make that chart big. That small little down that you got there was everything. That was everything. It was a 60% decimation in a high liquidity asset class, if we can call it that. And it took a mega surge right the way up to there before it could get going up to here. So down first before you get to go up. So what goes with down first? Well, you're going to do something very inflationary again, aren't you? You're going to create a whole bunch of money to pump your Bitcoin up, to pump this, to justify bailing out more banks, to steal from the masses and create more inflation. We are in a hyper stagflation environment. The big part is inflation. They are going to continue to create inflation. It is an acceleration of wealth. So we've spoken about the dollar weakness on the euro, on the pound. We'll go and check the Dixie. So we're talking about dollar going down. But here you've got to remember, why must or why should the dollar go down, Francis? Apart from your technicals, why do you say it? So let's just remind you of this chart. You had the debt go down, my friends. You had the debt go down immensely. And the treasuries fell the most. All those people bragging about the dollar's relative strength were bragging about the fact that USTs fell more in debt valuation than any other major nations. Debt devaluation. There's too much of it. That is the chart that they are ignoring talking about from 2020 to 2020 there. The loss in value of debt. All that debt creation, someone else is holding it as an asset. Everybody has now worked out that you are going to get negative real interest rates, not a loss, a guaranteed loss. An absolute guaranteed loss. There's no risk-free rate. It's 100% risk. You are going to be paid an interest rate significantly less than the existing inflation rate. And by the time you get your money back, it will be significantly less in 10 years' time. If it's a 10-year bill, if it's a 30-year bill, it's going to be chicken feed compared to what you had to find to lend to them at the time. And the interest you're going to get is significantly below the inflationary aspect, which is the amount of new money they've been creating on an ever-escalating basis. It is the stupidest investment category right now. Shorted at every opportunity you get. Never a debt holder be, even for a trade. Don't ever go long. And you're going to hear guys tell you long. I've heard Mark Farb, I've heard Raoul, I've heard tons of people. Never tactically traded long. It's in a decline. Did you see the rate of that decline? Did you see that rate of that decline? If you want to get killed, let's just put TLT up. This is the best proxy I have for long-term debt, and this is how it looks. If you want to get killed, try call bottoms on this Ponzi deflating. Let's give you a monthly right there and have a look at it. That's how it goes. Nothing. That is end of 40-year bull market, guys. That is end of 40-year bull market. And I said escalator up, elevator down. You've had your first 10 floors of elevator cable snap. Do you want to force your way into that lift as it's plummeting down because you think it might bounce somewhere on a block of rubber in the lift column? No, bad idea. Shooting star. Don't even go near it. We were the first to call this up at 160. It's traded all the way down to 80. And let's just be clear. A halvening on the bond market. The bond market is meant to be the sleepiest, slowest, stupidest, most stable market that barely ever moves. It's for pensions and pays a small stipend of interest. This is equity indice.com crash scale. This is not what bond markets are about. They are stable. They're supposed to be stable. This is about, imagine USDT. Bond markets are the equivalent of USDT to crypto. They're meant to trickle along roughly at the same place, marginally creep up in value, sometimes marginally shed some value and pay a steady yield. A stable coin that pays a yield. That's how you should view bond markets. That peak over there was 180. That was 82. That is not a stable coin. Imagine your stable coin went to 42 cents. You think it's fulfilling your objective of being a stable coin? No, sir. No, sir. No, sir, at all. It is not. So this is a collapse in the debt market. So once you've had such a huge debt market and now you're pivoting to rate cuts, you're actually supporting the debt market. Do you understand? You're supporting the debt market. So what happens? This can't go any lower. So what goes down? What goes down if you're supporting the debt market? Suddenly you go, rate cuts. We're going to support Fat Boy. Okay, let's support Fat Boy. What happens? You start pushing Fat Boy. He needs some oxygen. He's been underwater. He's running out of oxygen. He needs to come above the surface. But the water in the bowl is getting higher and higher and higher. What happens? Skinny geek dude goes down. And he better have sucked deep into those lungs because he's going down for some time. This whole asset category of a fiat and a debt instrument are taking turns in staircasing down and devaluing. They've got to go down. The game is up. 2020, we told you, as per that TLT chart, the end of the bond market bull. It is a bear through to virtually potentially zero, until they force reset and they collateralize everybody into a whole bunch of nothing. Lots of deals done, each time bigger haircuts. You know, they fudge a default with lots of contractual shenanigans. Do you want to ever be caught longing it for a short-term tactical trade when the big bomb goes off? No, never long the bond market. Simple people, no, don't do it. Keep your word simple. It is a short to square. Okay, everybody got that. So what's going to happen as the treasuries get bid? And they have to get bid. You have to find money to get it bid because they cut by 2 interest rate points. Until the market says, sorry, Fed, we're not accepting that. And the rates don't go down when the Fed cuts. That's a doom day, a fail day, by the way, when the market decides we ain't listening to the Fed. But you know what? The Fed is the market. They talk to their primary dealers and banks. They're going to make sure that can't happen. They're going to make sure there's some bid. But what are they doing like mad in the meantime? Printing up and killing the dollar so that they can ensure there's a bid under that debt market to allow that to cut. What does that do to the dollar? Absolute downside. Absolute downside. That's why, even against failed fiats like the pound and the euro, you're going up. This is dollar death. How many times have we told you to be long gold? Long the gold. Long the gold. Buy the gold. Links below. Bullion vault. If you've got $10 a week or a month, put it away on there and then pivot it to physical later once you've got $1,000. Pure gold, anywhere in the world except the American Oz. ITM for the Americans if you want it delivered locally. All in our notes below. You will pay what I pay. I've bought from all of those, every single one I've used. Okay, so with that understood, that's why gold is running. Gold sees the whole game. It's like truth in this inversion, perversion, creeping Marxism that is coming down the chute to you all. By the way, how many of you noticed Israel thinks that having pet rocks, useless pet rocks, is suddenly something they want to ban? Why would you want to ban useless pet rocks called gold and precious metals? Well, they're going to do surveillance. They're going to remove their biggest notes. They're going to do in India. Isn't it always the first? The kind of nations that's one of the first. Do you remember the other event around the shoulders in 2019? Always one of the first. It is a military junta. It is a terrorist state, and it can be relied on to be first and foremost showing leadership in anything satanic. That's it, where you're going. That's how it is. So understand it. That's what's coming. And if they can get it through, other bigger countries are going to start talking. We've told you and warned you and gone on other stations from Palisades Radio, SD Bullion, Miles Franklin guys, and said the day is coming of black gold, illegally held gold that you failed to register. Because they're going to come and want to make you register it, and that's how they'll subsequently take it from you. First, they want to know how much you got. Then they're going to come with an unrealized capital gains tax, and then they're going to force you to sell and say it's no longer legal, a la the little test bed of Satanists in the Mediterranean. That's what's coming from you. That's what's happening. You need to understand that. You need to understand that, and we've warned early about it. Have you got your invoices of sale? Okay, so what's going on here? So that was those key elements. That's what's happening in the debt market. If you're going to bid, a forced bid, that you're going to put your bankers into, your primary dealers, to bid up the debt market, that seesaw is on a multiplier, a little bit up on the debt, a mega down on the dollar. So let's have a look at the Dixie for that, because many of you look at the currency charts in terms of the Dixie when you're talking about dollar strength. This is the Dixie, and this is our opinion. You are holding for now above the $100 mark, which we've marked in massive blue. By the way, are we just perma bears on the dollar? Do we just hate on anything American? Not at all. We love our American people. Their nation is captured by the Zog, like most of our nations, and we have as much empathy for them as anyone else. We called this breakout. We were called long. We got an upside HVF out of this that said you're going to run 110, and we were net long, with dollar bias there. And it was a tough time for Bitcoin. It was a tougher time. Gold went into a 3-year broadening structure containment. It didn't make progress. Then we said the fractal is here. You're breaking the 2000. It's once, twice, 3 times a lady. We told you this on this channel. You can now pivot long on the gold. Where's the gold? Where's the gold? Over there. And since that breakout over here, you have been killing it. There it was. Absolute a kill. That is an absolute kill, guys. You're talking about that breakout on an HVF at 2000. And we predicted it. We said the 4th time is your lady. That's the lady, a real lady. The first three were gents that had had an operation. Now you get the real lady. Who wants a real lady instead of a gent who's, Mikey Obama? No, you want a real lady. You want a real lady, and that's what you got. And we told you, that's how it comes. Just like that. There's that broadening structure. Once, twice, three times, and the fourth time you're through. And now it's support. That's it. Once, twice, three times. Now you're up. Look at that travel. You want to be in, never mind investment long, you can leverage trade it. This is the specialty of our community. Getting the right time to be long the right things. During dollar dominance with the run up to 14 on the Dixie was not the time to be leveraged long gold. This was the time. This is and was from 2030, $640. That is like 30% on 2030. That's like 33% just about. That's what you've made by getting in there. And if I put that on a monthly chart for you all to appreciate, this is your game. This is gold. This is your game. That is a key breakout. It took a long time to clear it. And once you're there, you're up, up and away. This is your candles. 1, 2, 3, spinning top, kind of green. Let's call it green. 4, 5, 6, 7. 7 straight months of up on gold with one indecision flat month on a doji. 7 straight months of up to give you that. Called on this channel. Gold will continue to go up. So if dollar's going to go down on the Dixie and could be going, what's it going to be? Pound's going to 140. Euro's going from 109s to 116s and a half. Well, it's got to at least on those setups go 90s. What do you think with the dollar going down further in the future, that number is going to do on that gold chart? What do you think it's going to do? We called you 2,900 before you might start getting your first spell of slowing down on a flag. Long time ago where it seemed a mile away. You were still dealing with 1800s and 1900s. Right here in this mess during that dollar firm period. Now the great lie about the labor and the unemployment's being found out. Now unemployment's going up. Now the US debt market's been in yield curve inversion for the longest yield curve inversion this side since the 80s that has now turned. You are awaiting the event's name for the next crisis that they're engineering for you right now behind closed doors. And in the meantime, oil is starting to roll over. It smells samey. We gave this trade, gold long. Before the yen trade unwind, you were being told gold long, oil short. What happened to oil so far? You might say, well, it's not done anything fast. It comes suddenly. It comes suddenly. It's triggered. It broke these levels. Key support, key support, key support for oil. Smashed it. Came down, ran its first target. This is the early prelude. This is stage 1 and 2. The real money's made in stage 3. Perfect revisit to the funnel and is now rolling over. And now you get the benevolent Saudis. The benevolent Saudis, the fork in the chain of the Satanists, suddenly saying, we no longer want to make max money. We never mind that $100. Never mind that $100 stuff. We'll be nice now. We'll be nice. That's what they're saying. Saudi Arabia to abandon the $100 crude target, to back markets, to take back market share. Market share of what? A reducing market. You're going to glut the market by going back to producing. They brought the cuts. They brought the cuts. Why? I said to you then, the world is weaker. On this channel, when we spoke about oil and we were concerned about whether it was going to go, that there was any strength left in it. Let's just find the oil chart there. We'll come back to the Dixie. On that period, US oil. They brought these gaps. You see that gap over there? Right there? That was their cuts. That's their cuts. They did it not once, they did it twice. Cuts. And I said to you, it's weaker than you think. The economy is weaker than you think. The labor lie that later got exposed, we were right. the economy is weaker than it thinks, your deep, hard recession, yield curve will revert. All of this has now happened. And now, all of a sudden, they don't want to preserve price anymore. It's an about swing. They want to pump lots of oil. Well, who do they work for? They work for Zog out of Tel Aviv, out of their own Riyadh, and out of New York and London. Transnational conspiracy of people that are going to take down oil. Why would you take down oil? Well, if America's cutting rates, the problem you have is the dollar gets weaker. That's what we've just spent all of this stream so far telling you. If the dollar gets weaker, what happens to Americans on inflation? Now that they don't manufacture everything, it's all made China, Thailand, Vietnam, bits of Latin America, maybe Africa for their cocoa and their coffee. Who knows? What do you think happens? They import inflation on account of a weaker dollar. They import inflation on a weaker dollar. But they've done so much damage now, and the consumer is so wrecked, and they're trying to hold things together. How do you reduce that amount of inflation if you understand that the Rockefellers, largely with the Rothschilds, control oil? The American oil control was through Rockefeller with the benefit of Rothschild Rail, giving him beneficial prices so that his press gang of murderers could go murder small operators, force them into sales, do all the other thuggery that you used to from a state of violent terrorists. And they did all of that, and they got to monopolize. Competition is sin. That's a Rockefeller quote. We must own it all. We must have it all. Think about that as the bombs fall in Lebanon. That's also their land now. Okay? Understand who runs this show, how it all works, and how it all goes down. So Rockefeller Oil goes and says, hey, along with Rothschild Oil, London, Shell in the Cairo, Middle East as well, divided up between them, we need to take the potential for the spike in inflation down a bit. What do? They let it collapse. Now, Saudis are going to pump as their price is decreasing. What does that cause? A glut. That's exactly what we got in CV19. Everyone wanted to hold their revenue. No, everyone was cheating. There was no real OPEC. Russia pumped a whole bunch. They're not going to not earn money while the West is earning money. Why would they be the stopgap guy? Saudis go, we've got to keep the income coming in. Everybody flooded the market. You get a glut. You got single digit. You got zero on the cash markets. You got negative on the future markets. Very, very samey feel. I'm not saying single digits this time. I'm not saying negative on the futures market. I never even predicted that the first time. But I am telling you that oil is likely to go down. The gold to oil ratio is a real difference. And this is the highlight I always make to commodity investors. You want the monetary commodities. This is a debt-based collapse. Do you understand? This is a fiat and debt-based collapse. They're going to kill the consumer. They're already busy doing it. They've largely almost won that one. They've wrecked the consumer. They will absolutely see oil go down. It gives them a license for brain wiping everybody on inflation and must print after their next crisis, which I predict is coming soon, which is why people with liquidity charts on Bitcoin are going to jump in time for a crash, in my opinion. Potentially. Could be wrong, but I'll wait it out, thank you. I'd rather have cash and be buying at the bottom and getting 3 times more than the guys who are having to wear one of their manufactured event-based crashes for which the oil market is already showing the down, and we're yet to have the best part of the oil market short trade, the capitulation part, which is the bit where it spills its guts completely and rapidly. And that, my friends, will take you below the 52. If just the HVF performs and nothing else, you will be getting a collapse down to 52. If this turns out a head and shoulder as well, you'll be getting lower still. So our call is you're going to fall through 52, 42, which spells a 40s number. And in actual fact, if the head and shoulder triggers and runs all its way, you could run sub 32. So you could see 20s, 29. You could see any of that. This would be the big trade if both patterns perform. That is possible on the downside. At the same time, what's going on? gold will go higher. Of course, during an absolute mega fear event, gold will dip, and let me show you how gold dipped last time. That is why we keep reiterating a very low downside beta is beneficial. That is your CV19 gold dip in one candle month. If you're not using leverage, that didn't hurt you at all. You went there, you traded here, before you were done, you'd gone down, you'd gone up, you'd gone down, and you'd gone back to where you were, and you went on to make new highs in later months. You literally had to see that month out. The downside beta was nothing. By the way, that red candle, or the dip on the hammer, let me get the right candle, that was your downside as a result of the yen trade, the carry on the yen trade. No, that's it there. Right? Let me get it right there. August. There it is. That's your downside. It ended up a green candle after dipping. I will show you on a time frame smaller than the month. That was it. August. You dipped on that hammer and you went straight back up. That is the value of having something that has a very low downside beta. That is the value. And you're going into an environment where I'm suggesting to you, you're about to get a downside beta. Bitcoin is not the hold. Fancy alt is not the hold right now, if the demand-destroying event that we're waiting for happens. It's not the environment to go print mad. No one's going to come and say, let's do 7 trillion QE. They've just finished telling you how much inflation and that they're only just starting to worry a little bit more about the labor market than the inflation. How the hell are you going to lift a 64,000 Bitcoin to 150,000 when it took 7 trillion to take it from 10 with a 4K dip up to 64? How the hell are you going to do it? 7 trillion wasn't all into Bitcoin. It was into the economy, but a certain percentage went into various things and flooded everybody out. So the winner is gold. The winner is gold, 2,900. Whatever happens, the winner is gold, including a demand-destroying event, which is going to be debt or bank-related as well, potentially, regardless if they have something for the shoulder and the war or anything else involved. It's still going to involve debt and banks. It always does. So this is an absolute winner. You must be long gold and be warned. They need oil down. And why? Oh, why are the Saudis no longer a for-profit trading business? That is the big thing. Why or why now? This news coming out. We gave the trade a long time ago. Look what it did to the oil market. Wait for what comes next. Downside. And as the dollar index breaks the 100 to the downside on further terrible data highlighting the fullness of the damage to the US economy, all those nationalists saying, oh, it's China that's weak. It's this one. There's so many nationalists. You know who they are. Oh, you know, the dollar apologists and the hegemony guys. Your hegemony is over. There is not a single empire where the interest bill got beyond the military expenditure that ever didn't fail. It's over. You spend more now on interest to the banking cartel, the vampirical pests that are in your throat, sucking your blood to that extreme. You now are spending more giving money to them in interest payments for giving them the exorbitant privilege of creating your money. That's your privileged class. And now it's the cost of that in a single year is more than you spend on your military. And that is an absolute definition of a collapsing empire. There is not one that has existed beyond that. And that's what's coming for you. So forget your dollar bulls. Forget your we might be bad, but we're the least dirty shirt in the laundry. We're the tallest of the midgets. I've heard it all a million different ways. The hardest downswing is for the nation state that had the exorbitant privilege. Ask the British post World War II, as it was in the most friendliest of ways handed over to America, actually. This is not going to be the same. This is not at all going to be the same. America is going to go down swinging like a drunk brawler in a pub. That's how it's intended to go. Look at the rhetoric that the leaders are putting. This is Bolshevik communism, war-based population, you name it, it's all in there. This oil will go lower is our take. Watch out for it. They need it lower because the events they're going to create are to wipe the inflation risk out. They're going to make you so worried and in fear for what's right in front of you right now, they will go back to printing. We are stuck. We're a heroin addict. We need ever greater amounts of heroin on a 4-year cycle to keep operating. And then we float about for the 2.5 years after we've been pumped up to the gills with opioids, and then we slowly start to get hungover again. Each time it takes more, each time it's a bigger amount, and the only thing is, you're ceasing to be a significant human being. Your empire is over. You're a drug addict. It's all over. Your assets are gone. You're going to devalue. It's done. The safe haven is precious metals. And to save the amount of inflation that it'll spike in the initial instance, they're going to kill oil. But once they do the print, the more you kill oil to the downside, the bigger the pump you will get afterwards. And that saving of you is going to lead to the super surge that will run inflation double digits next time. Here the prediction here for Americans. You did 9% on inflation at its peak. Right here, right now, next time, if they suppress oil with any event-based crisis, you will get well into the double digits on inflation. And boy, there's no increases in any business. There's going to be a stagnant employment market, and you are going to suffer if you do not plan for that event. You want to be short debt, you want to be long gold, you want to consider being short oil, potentially, if you know how to trade, be part of our community to see how we intend to implement this, how we are currently doing so, what is our trade that I gave to the guys today that's going to benefit to the long side, that is a commodity. You can see all of these things by clicking the link and booking a call. You need to build wealth during these crises. They're the best opportunity. As dark and as black-pilled as this whole conversation is, there's a huge, like yin and yang. I've spoken about the dark side of it. There's a bright old yin with every yang. This is going to be the divisor of those who survive. Those that go wealthy as a result of these events, and the masses that get impoverished. This is a global transfer event of wealth. Right here, right now, you're watching it. It's happening. Okay? This is what I've come here to tell you. I've come here to remind you of a 2017 video I did on the Hill in the UK that's got I don't know how many views. And I'm reminding you here again today of what it is I'm saying. And the day will come, I'll no longer be allowed to speak the way I do on a channel like this, and you will not hear it. And for my own safety, I will disappear. Those days will come and we'll be gone. You will either have made what you made or you won't. I'll be servicing my community quietly, working from the wilderness on some godforsaken VPN via some blockchain to try and maintain anonymity and living a great life. Rural, with my own food, with all the right people I want around me as neighbors. You've got to decide how you're going to play this. It's going to get super rocky out there, but you can build wealth in those opportunities that are coming. I'm going to have a quick look at the questions and then we're going to finish. Daniel Marks, great info. Francis, thank you. Daniel, pleasure. See what asset recovers the best during a major crash, and buying that asset seems like a great strategy in and of itself. Gold is it. Gold is it, because everything they do will pump it to new heights. What sets it back by 1 step guarantees it goes forward by 5. What sets it back by 1 step? And more people know that. So the 1 step now becomes half a step because we've learned to buy the dip on gold in debt reset season. This is not the normal environment for independent financial advisors. This is not advice. I'm not regulated as an advisor. But let me tell you, your IFA will kill you. He'll tell you how buying debt will be great for you. At what price gold's overpriced? You're not even begun. Let me tell you what else is going to run. You have not even begun on gold. You have not really at all begun on silver. And miners, if they get cheap oil for digging holes in the ground at the same time as a rocketing oil price, they have not even come near to beginning. And I don't get anything out of you for telling you that. I don't have an affiliate link for a gold miner. But you should have some of the metals for the stability, but you should get yourself some mining stocks. And we talk about which ones we're buying in our community. The link below will tell you ones that are currently now in big time frame macro HVFs that some of our community members have even found. You can be part of that. Click the link below, book a call. Whatever the gold does, you're going to get a multiple, in some instances, on the smaller caps, times 10, times 50. People don't remember what happened into the 80s during gold runs. Let me tell you, the crypto market borrowed from gold small caps in the 70s. And they still barely have achieved what some of those have achieved. 100Xs, 250Xs. Go listen to a couple of Rick Rules videos who was around during that time on metal runners. You will see. What else? Guard drones. Yes. Great performance. It is a performance. Pumped up. I'm ready to fight. Give me the gloves. I'm going to go hit a punch bag somewhere. I'm psyched. China and Japan are selling new vehicles in Southeast Asia for half the price you would pay in the greatest economy in the world. Of course. And soon that consumer will no longer have that same power. Soon that consumer will no longer have the same power. I've said to Americans, come on, you guys, you've got to sell peak America, get the most dollars while it's dollars, turn it into gold, get out. It's going to turn hard. What's going to happen? They're going to reduce what government pays towards services for you. They're going to increase what government taxes. Both Trump and Harris, not that they're the people that decide these things, are in sheer trouble. They are inheriting the worst of financials ever. They are inheriting the worst of financials absolutely ever. And who's going to get punished for it? You, American citizen. And by the way, British citizen in Britain, Australian citizen in Australia, New Zealand citizen in New Zealand, Canadian in Canada. It's not just the Americans. Good luck, Westernocracy. They're coming for you on every level. Unrealized capital gains, a license to steal if ever there was one. Who determines what's unrealized? Who determines the price? The psychopaths do. The communist, Marxist, Bolshevik pig dogs do. The extractors do. Not you. Not you. It'll be whatever they tell you it's to be, and you'll pay up or you'll be jailed. That's what's coming to you. Are you waiting for that to happen? Get out of there. Take your money. Get top dollar. Put it in an asset like gold. Move somewhere else. Get remote. Different passports. Different tax. Find yourself a new slave master who's glad to have you and will give you better terms. The old one is fat, ugly, and sick and wants all your blood. He wants a transfusion of 10 liters of your blood every day just to partly stay alive, and he's dying anyway. How much are you going to give to him? Let the vampires die. When will silver have its day? It's already starting. It's starting. When will silver have its day? It's already starting, but we will see it on the gold-silver ratio. We will see it on the gold-silver ratio. The big monster, the money is with the central banks right now. That's why gold has been one of the best. The money is with the central banks right now. That's why it's one of the best. Stay with him. But we are seeing a little bit of a tendency. 2 rejection candles there. That's quite a rejection candle. Quite easily come down to the lower side. But I don't know yet if silver's ready to break the blue line, 75 gold. When that happens, then we have 65. After the break of 65, your SILJ, S-I-L-J, your ETFs on small silver, your miners, my goodness, friends, that's going to be crypto for the mature classes, the aging ones. It's going to be very, very powerful. It's going to be very, very powerful. But I will tell you, you're safer with mines in Congo and Africa, owned by offshore people, than you will be in America and Canada. Why? The Marxists are in charge. They will seize the assets. They will seize the assets. You can have inversion, perversion. Latin America-based mines, African-based mines were more likely to stay in private hands than American, Canadian, and Australian. Watch me now. Everything is going to be turned upside down. A corporate entity will have more power in an African nation, which can easily be overthrown if it gets too stroppy, than you will under a Yellen, Harris, Trump government when they have no more money. and their job is just to steal what you have. Good luck with the share register. Okay, guys, passionately delivered. We're going to tell you, this is your chance to maximize what's coming. We're warning people there are better entries to be had for the likes of crypto, and gold can dip at some point on events, but it will come back faster. The only thing that will hurt you is if you're over leveraged on any of those things. There's other commodities that are running. We're discussing them in our community. Go and watch. Watch out the consumer. Consumer more wrecked. They're lying about the labor. They're lying about how bad it is. The Fed is always late. They started with a double cut. You should know. Big, big trouble. No such thing as a soft landing when you've had a yield curve inversion. You're talking nose cone into the tarmac at 390 kilometers per hour. The whole front end of the Airbus absolutely crushed. Good luck in that Boeing. You're going to get it coming at you hard and fast. That's when they'll get to do the QE. That's when gold really runs from the 3K mark straight up to the 4, 5, 6 and beyond. Silver will be responding as well. Till next time, book a call, come and spend your time with us and chat. Use the links below if you want to buy. Pay what I pay. There's no embedded costs. Use the bullion vault. Use to put small amounts away for a while until you've got a job lot. Use the pure gold for rest of the world. Use ITM trading for America, and hit us a like and a share. That will pay us for our time, and we appreciate it. We don't know if you don't, but we appreciate it and we feel it, and we survive because of you. We can do more of these live streams if you're supporting us and making it worth our while. We'd love to help you too. But the place where you get helped most is the place where the people have respected us. That's in our community. And book a call. We have options right the way down to self-studies at low price points with multiple payments allowable for you, so you can take it as you are earning. And you will still get a Sunday webinar, all our non-farm payrolls, and all our learning materials for how you can become a hunt volatility funnel trader. The key to recognizing what I am saying and doing here is coming off these charts. This skill is totally transferable. I'll be dead one day. You can have it for the rest of your life, and it'll serve you in everything you do. Retail housing will go down in America too. You're going to see the stock market go down. You're going to see retail housing go down. Not immediately, the stock market, it still looks strong. But the event, my friends, is going to be your wild card. Just so that you have no illusions. How's the valuations on S&P 500 to sales? Look at that chart. March 59 and 62. You stayed in a bear market in the equities until 82. Like the bond bull market and the equity market, when you were last two standard deviations valuation, S&P 500 to sales. Then, the last time you were there, dot-com crisis, March 02, all the way down. Now, 22 and 24, you're hitting it a few times. Two full standard deviations away. Only the miners would be my long-term hold in all of that, in an environment like that. And they are the opposite half of that. They're at all-time lows as a scale per SP 500. Gold, silver, metals, monetary miners of the commodity section. There are a few softs that are of interest. As I say, we'll talk about it later inside the community. Thanks for watching. Thanks for coming on. I hope you enjoyed this live stream. If you want more, support us through the pure gold. Go buy half an ounce. Go and do it right now. Buy yourself 10 silver ounces. That's saying thank you. Just say, hey, I'm saying thank you. Because in thanking us that way, you're thanking yourself. Let me tell you, you're thanking yourself and your future. And you're starting to see that already. Till next time, I'll catch you later. Thanks for joining us.